Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Tuesday, 2nd of June, recording today's video 7:40 p.m. Eastern Standard Time on the 2nd Eastern Time. I was expecting upwards movement, but prices moved sideways and we have a small red doji candlestick for Tuesday's session. During Tuesday's session, price moved a little bit lower and it breached the invalidation point on the hourly chart by 0.02 of a point. That necessitates a reanalysis of this triangle. I expect now that we're in a sideways move, the triangle is incomplete, and when it's done, the main wave count expects a final upward thrust. But the situation from a regular technical analysis perspective today is remarkably unclear. For the first time in quite a long while, ADX has turned up and it's just above 15. That may be the indicator of the very early stages of a new trend. The DX lines are telling us that trend should be down. But we have a shorter EMA above a longer EMA, and very importantly, price remains above the long-held bull market trend line. I'm going to use my judgment in saying that that trend line is the most important indicator. While price remains above it, I'm not going to expect any kind of bear market is underway at all. Let's have a look at the wave counts. And this is the trend line I'm talking about. This lower aqua blue trend line is drawn on a weekly chart. Every day I link you back to prior weekly charts to show you how I'm drawing this double aqua trend line. This is an approach outlined by McGee in their classic technical analysis of stock trends. This trend line goes back to November 2011. It's reasonably shallow. It's repeatedly tested. It's highly technically significant. While price remains especially above this trend line, we should assume a bull market remains intact. For Tuesday's session, downward movement has almost perfectly touched this trend line. I'm expecting from the Elliott wave count a little bit of sideways movement for a day or so to complete this triangle, and when that's done, I'll calculate a new target upward for the final thrust up. It's likely to be equal in length with minuet wave A here, and that was 49.73 points. The final upward thrust to complete this ending diagonal should overshoot the 1-3 trend line by a reasonable amount. The bull wave count sees a primary degree third wave coming to an end. It subdivides in it as an impulse in exactly the same way as primary C does for the bear wave count. That's why the labelling is pretty much the same. They are both expecting an imminent end to a primary degree impulse. The final fifth wave at minor degree is an ending contracting diagonal. The traditional technical analysis equivalent is a rising wedge, and they are both terminal structures. An Elliott wave ending diagonal requires all of the subwaves to be zigzags. So we have a zigzag for 1 and 2 and 3 and 4, which overlaps back into first wave price territory because that's the rule for a fourth wave within a diagonal. And so we're now expecting a fifth wave zigzag, 5 triangle for the 3, and then I'll expect a 5 up. The diagonal is contracting, and a third wave may never be the shortest. Here, the third wave is shorter than the first wave, and the fourth wave is shorter than the second wave. Those are the rules for wavelengths of a contracting diagonal. That means the final fifth wave has a limit. It may not be longer than equality in length with the third, so it can't move above 2212.95. That would also make sure that the third wave meets the core Elliott wave rule, that it can't be the shortest. Within this final zigzag up, this B wave, if it morphs from a triangle into some kind of flat or combination, and that is entirely possible, it can't move beyond the start of A, below 2067.93. That price point is really important. A new low below that point, before we get new all-time highs, would tell us that primary 3 was actually over a few days ago. Let's have a look at how this triangle may be unfolding at the hourly chart level, where the beginning of this final zigzag of the ending contracting diagonal is this point down here. So the final zigzag unfolds as a 5-wave impulse for the A wave. Now the B wave triangle may be incomplete. When it's done, I'll calculate a final target up for the C wave. This downward movement is ever so slightly beyond this downward movement, so this can't be C of the triangle because E can't move beyond the end of C, not even the tiniest fraction. So this sideways movement for Tuesday's session could have been a continuation of the C wave of the triangle as a big zigzag. So the triangle now would expect a D wave up to probably move a little bit higher. It's really unlikely to be over here. It should look like a pretty clear three-wave structure at the hourly chart level. And when it's done, a final zigzag down, or maybe even a triangle for the final E wave, can't move beyond the end of C below 2099.14. D of a contracting triangle may not move beyond the end of B above 2134.72. D of a barrier triangle should end about the same level as B, so long as the BD trend line for a barrier triangle remains essentially flat. What that means in practice is this invalidation point for the triangle is not black and white. If we get up to pretty close to this price point, I'll be looking at the structure really carefully. If it looks like a very obvious three-wave structure, it's probably wave D of a barrier triangle. But it's much more likely D will end comfortably before that point. It's much more likely it'll just be a quicker, simple zigzag. So I'm expecting some more choppy, overlapping sideways movement for another day or so before we see the final upward thrust to be about even in length with the A wave and to take price comfortably above this upper trend line of the contracting diagonal from the daily chart. When you look at the structure at the daily chart level, these trend lines, the pink trend lines here, are getting reasonably close together. And if we look further into the future, they'll cross over on the 3rd of August. So this structure has to end somewhat before the 3rd of August. It has to end soon. We're getting towards the end of it. At the daily chart level, this is the bullish alternate. It's actually not that bullish, really. It looks at the possibility that the final zigzag of the contracting diagonal was actually over here, and that we're starting to see a bear market at primary degree. Primary 4 would be expected to most likely last a Fibonacci 21 weeks to have a 1.618 duration with primary 2. I'd be expecting it to be more long lasting because it's most likely to be a flat combinational triangle, and they tend to be longer lasting structures so that it exhibits structural alternation with the simple zigzag that was primary 2, which lasted 12 weeks, one short of a Fibonacci 13. Primary 4 would be most likely to take price down to within the territory of the 4th wave of one lesser degree. Intermediate wave 4 has its upper edge at 1730 and its lower limit at 1647. So this is a substantial downward movement. We do not have any confirmation at this very early stage of a substantial bear market movement. We need to see initially a new low below 2067.93 that would invalidate the main bull wave count. After that, I want to see the lower aqua blue trend line clearly breached by a close of 3% or more of market value to indicate a bear market. After that, a new low below 1820.66 will provide a lot of price confirmation, a lot of confidence that we're in at least a primary degree downward move. About that point, I'd also be looking for a 5 down at the daily chart level. While we have zero confirmation, any new high at any stage above 2134.72 would immediately invalidate this alternate. This is the bear wave count at 2, sees an end to the triangle with some sideways movement and a final thrust up. The trend change for the bear wave count eventually when it comes might be at cycle degree. Some regular technical analysis is kind of muddying the picture today. Now we've got data for this candlestick Monday session. That's the first day in quite a while since, I think it was back here somewhere, where ADX finally reached above 15. It's just above 15 and it's clearly turning upward at this point. That could be an indicator, an early indicator of the early stages of a new trend, and the DX lines are telling us that trend is most likely to be down. However, I think it's really important to respect this trend line. This trend line is the strongest piece of technical analysis I have at the moment. It's so long held and repeatedly tested. While price remains above this trend line, I am not expecting any substantial downward movement. This is a warning. We might be about to get some more downward movement. Maybe my triangle is wrong. Maybe the B wave is going to move lower. That invalidation point at the daily chart level should also be respected. While price remains above this trend line and above 2067.93, I'm not going to be expecting any sizable downward movement. This is a warning. We might be about to get it. While price is rising to new all-time highs, on-balance volume is declining, and that's a warning that there might be something big going to happen. We might be about to see some more downward movement that we have seen recently, because a price rise which is not supported by volume is suspicious, and this divergence actually goes back a bit further than this. It goes back to December last year, so that's actually quite substantial. That's all from me today with your S&P analysis, and I hope that all of our members are having a fabulous day.